Welcome to Fireside Chat. My name is Sai. If you're new to my channel, I talk about how I budget, save, and invest money to achieve financial independence. Check out my other videos about how I calculate my financial independence numbers, how I got myself out of $100,000 in debt, how I save and invest over 60% of my income, and how I enjoyed my life while I'm on a financial independence journey. Employers are possibly facing something that we haven't seen in our lifetime. There's a record number of American people quitting their jobs in the year 2021. In the month of April, the Labor Department reported that over 4 million Americans had quit their jobs. The news media is calling this
the Great Resignation.
The Great Resignation.
The Great Resignation.
The pandemic has given people all kinds of reasons to leave their jobs. A job with more money, more flexibility, and more happiness. However, Capitalize in June 2021 did a study that over 24 million people forgot to roll over their 401k plan to their new 401k plan or IRA, and a total of $1.35 trillion just sitting in their old 401k accounts. Each forgotten 401k account could cost individual up to $700,000 in their lifetime due to high fees and low returns in their old 401k accounts. All of these forgotten 401k accounts could be costing people over $116 billion every year. If you want to read more about the research, I'm going to post a link in the description below. In this video, I'm going to show you what you should do with your 401k or TSP when you quit your job. Also, I'm going to show you how you can use your Roth IRA Conversion Ladder to withdraw from your 401k earlier than 59 and a half. Here's my quick disclaimer. I'm not a financial or tax advisor. Everyone's situation is different, so please do your own research before you start rolling your 401k over to the IRA. In order to move your old 401k into a new 401k or your IRA, you have to quit your job. So when you give your employer a 2 weeks notice, make sure you talk to the HR, a 401k specialist, and let them know what you want to do. And here are your options. Option number 1 is to roll over your old 401k into the new 401k only if your employer allows it. So make sure you talk to the new employer's HR department, talk to them about the 401k rollover plan. Let me give you an example. Let's say your old employer uses Vanguard 401k plan and you need to roll it over to Schwab 401k plan because that's what your new employer uses for their employees. You're going to make sure your Schwab 401k account is active before you initiate the transfer with Vanguard. At the end of that calendar year, you will receive a Form 1099-R from Vanguard that you have completed the transfer. But don't worry, you won't have to pay any income taxes on the rollovers. You just need to file the form to the IRS and let them know you did the transfer. Make sure you roll over your old 401k from traditional 401k to traditional 401k, or if you did a Roth 401k, then you need to roll that over to the new Roth 401k plan. If you roll over traditional 401k to Roth 401k, you're going to end up owing taxes when you file taxes the very next year. Option number 2 is to roll over your 401k over to an IRA. This is the option that I would take because I have more investment options with an IRA than a 401k. Like I mentioned before, if you have a traditional 401k, you can easily roll it right over to the traditional IRA. If you have a Roth 401k, you can roll it right over to the Roth 401k. If you choose to convert from a traditional 401k to a Roth IRA, same tax rules will apply. I personally have a Roth 401k plan, so when I quit my job, my plan is to roll it right over to the Roth IRA account. The reason is with the Roth 401k, there is a required minimum distributions when I turn 72. There is no required minimum distributions with the Roth IRA. I can choose how much or when I want to make withdrawals from a Roth IRA. Also keep in mind that if your employer offers any employer contribution like I talked about in Saturday's short video, those employer matches are in pre-tax dollars, so they will be in a traditional 401k plan. And let me give you a quick example for this. Let's say you have a total of $100,000 saved in your 401k account, and your employer has been matching 3% of your contribution. If you have been contributing to a Roth 401k plan, you'll notice that you have a traditional 401k plan with, let's say, $20,000 employer match. So what you'll need to do is to roll over your $80,000 of Roth 401k to a Roth IRA and roll over your $20,000 in your traditional 401k to a traditional IRA. Now let's talk about the Roth IRA Conversion Ladder. A lot of people on their FIRE journey is actually using this method to start withdrawing money from their 401k plan before they turn 59 and a half. This strategy can be very complicated, so feel free to hit pause if you need to. Let me explain to you how this works. So this is how the Roth IRA Conversion Ladder works. So say you quit your job and you have your 401k and you're ready to roll it over to the IRA. So when you convert to the Roth IRA, this is when you pay income tax. So say you want to retire in 2030. So with the 5-year rule, you're gonna be eligible to withdraw tax-free and penalty-free in 2035. So say your living expense is $50,000 a year, then you can withdraw tax-free and penalty-free in 2035 to pay for your living expenses. And you can do this every single year until you turn 59 and a half. So first, you'll need to figure out how much money you need to cover your expenses every year. So in this case, let's go with $50,000 a year. Second, you'll need to figure out at what age you're quitting your job. In this example, let's say you're retiring in the year 2030 at the age of 45. Third, if you're completely retired, you need to have savings or non-retirement investment accounts that will cover you 5 years of expenses before you're eligible to withdraw from Roth IRA because of the 5-year rule. So every year you convert $50,000 from 401k to Roth IRA, you will need to wait 5 years to withdraw that $50,000 you converted. So you will need to wait until 2035 when you turn age 50 to be eligible to withdraw the first $50,000 conversion that you made in 2030. In the meantime, you'll need to have at least $250,000 saved in the savings account, not counting inflation, or have at least $1.25 million invested in the non-retirement investment account, because with the 4% withdrawal using the Trinity study, that investment account should never run out if you consistently have an average return of 7%. Fourth, figure out how much taxes you'll need to pay for the Roth IRA conversion every year. Keep in mind that your situation may be different from mine, so please talk to a tax consultant or do your own research. For this example, say you're married and you want to convert $50,000 to your Roth IRA every year. Let's say you're earning income from other sources and that goes up to $100,000 total every year. Then your tax rate could increase from 11.2% to 13.5%. That could be a difference of almost $7,900 every year. You'll also need to make sure you have enough cash every year to cover the income taxes. You should not use the retirement accounts to pay the taxes. So bottom line is, you will need to have saved a lot of money besides the retirement account or have several passive income streams to cover the expenses during the first 5 years. So now let's dig into the spreadsheet and show you how this works. So in the year 2030, that's when I want to retire at the age of 45. So assuming my 401k balance is going to be $1 million and the interest for that year is about $80,000. So that's a total of $1,080,000. With the 401k conversion at $50,000, and that's going into the Roth IRA, the annual IRA contribution at $6,000 from the personal contribution. So when I convert 401k of $50,000, it goes into the total IRA contributions, not counting my personal contribution here for $6,000 every year. So for that year, for the total interest, say it's also 8% annualized return, that's a total of $390,000 for the year 2030. So fast forward 5 years down in 2035, that's when I'm going to be eligible to withdraw $50,000. And as you can see, the money will continue to grow with the 8% return even when I convert $50,000. When I start withdrawing in the year 2035, that's when I can start paying for my living expenses from the Roth IRA, which is converted from 401k. So when I turn 59 and a half, that's when I'm going to be eligible to withdraw from the interest in my Roth IRA. I have been making 401k and Roth IRA contributions my top priority for my FIRE journey. If you're new to the FIRE journey, you need to start setting up your Roth IRA as soon as possible. My strategy to retire early will work if I continue to invest over the years. As long as I max out my 401k contribution every year, I should be able to reach $1 million by the time I'm ready to retire. It's still risky to just rely on the 4% withdrawal rule from the stock market, so I encourage you guys to continue to diversify your investment and work on your passive income streams. Thank you so much for watching my video. Let me know in the comment section down below what your thoughts are on the Roth IRA Conversion Ladder. I will post a new FIRE video every Sunday, sometimes Saturday at 9 a.m. I hope to see you in the next video. Have a good one. Thanks for watching. Don't forget to hit the like button and subscribe for more FIRE videos.